Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Tuesday, September 28th, 2010. Well, folks, the market sold sharply in the very early session this morning, only to rally back and turn positive, as again, it looks like the Federal Reserve is on the buying spree, buying, propping, doing whatever they have to do, dropping the dollar miraculously, and again, it is working to prop the market slightly positive. I'll go over this in depth in a little while, but first, again, let's take a look at what the indexes are doing today. Dow is up 45 points. Not much of a gain there, just a little less than 0.5%. NASDAQ is up 7.5 points, or 1/3%, and the S&P 500 up 4 points, or 1/3% as well. Now, again, folks, you have to understand what is going on right now in the markets, or at least what it appears is going on. Ever since September started, again, when volume was supposed to reemerge, it seems like a miraculous bid has been under this market and again lifted it. Now, early on, it wasn't a big deal, but when you have a day like today where you see economic news coming out so poorly, and we're talking about Richmond Manufacturing Index, we're talking about consumer confidence, we're talking about Apple rumor dropping Apple $15 to $17 at one point today, these negatives, again, killed the markets early. The volume was humongous early, and then miraculously, as you can see on your chart right here, the market just bounces right back up and turns positive and floats back up as the volume gets lighter. And again, there's a lot of talk about the Fed going out in the open market and buying permanent open market, plays here and just buying up the S&P 500 or the S&P, futures contracts, lifting up certain stocks that are in the NASDAQ 100. There's been a big talk about them doing that to the NASDAQ 100 stocks like Apple Computer, lifting that back after it was collapsing down, Amazon, Netflix, anything that's in the NASDAQ 100 and ranked high on the percentage of play that it holds or power that it holds in that NASDAQ 100 getting lifted back up. And again, that seems to be the issue here. And you've looked at stocks like ExxonMobil. What a tremendous reversal on this stock. Look at this move up here, really saving the market. These stocks getting the type of move that will save the market, will propel the market because they have such a big play on the indexes. Now, again, at this point, what does that mean? I mean, all right, so let's say the Fed is doing that and propping the markets up at this point by buying, going to the banks, buying treasuries. They're buying treasuries, giving the money to these banks, and then the banks are obviously using it to prop up these stocks to keep the markets afloat and keep them moving higher. If that is occurring, does it mean anything? Well, it means that they could hold this market up a little while longer, but ultimately they can't hold it up forever, folks. Remember that. There's only so much money to be used here to prop the markets up, and the actual move will only be exaggerated more so by the propping that's going on once it finally does come. Now, I'm not saying that the markets are due for a miraculous huge fall. That's not what we're saying here. We're saying that a correction is in order off of the major up move of 10+% on the S&P and 15+% on the NASDAQ at this in time. All right. Now, again, we'll go back to a couple other keys, and I want to show you a few other factors. Here's the intraday SPY on the 10-minute. You can see the open here was slightly positive, and then the selling began, folks, and it was massive selling on huge volume. Please note that the biggest candles of the day were all red candles. 1, 2, and then skip 1, and then 3. Any type of green candle was basically half the size of the massive sell candles. And again, that tells you that as soon as the volume lights up, there's someone out there propping the markets up and helping them lift up. All right. Now, the other thing I would like to point out here is that when the markets turn to the upside, it's not only because the S&P 500 contracts are being bought up and the S&P stocks and the NASDAQ 100 key players are being bought up, the Apples, the Netflix, the other players like that, Amazon and such, but it's also because the dollar started to collapse, and that's another thing that the Federal Reserve has a lot of power over. We all know that the Federal Reserve basically holds the cards in printing of money. When there's printing of money going on, it's diluting the overall currency. The dollar will continue to drop. That's really the goal, and the Fed has come out and said it. They're not trying to hide the fact that they're going to be printing money. All right, they came out in the last Fed meeting a week ago from yesterday, or today, make that, and said, we're going to do whatever it takes to make sure the recovery is on pace. That means print, 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 folks, in terms of how they're going to handle it. Well, what happens then? Well, the dollar will continue to drop. And interestingly enough, the dollar was slightly stronger early in the day, and then just as the market started to fall apart and really collapse down right around 10 o'clock on that consumer confidence number, all of a sudden, the dollar collapsed. And again, you can draw parallels there. I don't think it takes a big stretch of the mind to say to yourself, well, wait a minute. Interestingly enough, just as the markets were falling off a cliff, miraculously the dollar started to collapse, which in turn lifts the market and props the market back up. And again, who controls that? The Federal Reserve. So you have to kind of look at the big side here of the wall or outside of the box to truly understand. The amateurs out there, the average person that works a 9 to 5 has no idea what's going on in this market. You have to look past that and again to the bigger thing outside of the box. Now again, as the dollar has fallen here, it's propped the markets up. Notice how as soon as the markets got to the positive side today, or right around the flat line, the dollar was then allowed to go sideways. Another key indication that most likely you have some sort of propping going on, because again, the Fed doesn't necessarily need the markets to continue to go up. They just don't want the market to fall off a cliff. They want to keep it status quo, sideways. Again, if the market falls, people start to panic. If the market goes sideways, no one really cares. All right, so it was another flat day in the market. You don't have people panicking and not spending money and going out and spending money because the market went sideways for a week. That's not what happens. People feel confident, they feel overconfident usually, and that will be the case. So dollar again, very interesting trading today. You have to draw a few conclusions from that, and that is what we are doing here. Spiders again are coming in. As I said, you have continual resistance up here, and the Fed doesn't necessarily, and the markets don't necessarily have to continue to rally excessively here. They're already up huge off the lows, but please recognize that you have this double top right up here, right around the 114.80 to 115 level that continues to be major resistance. If I zoom out, you can clearly see that the top has been put in right here, going all the way back to last Tuesday when the Fed came out. So last Tuesday we hit this high when the Federal Reserve announced their FOMC meeting decision on Tuesday at 2:15 last week, and then look at this week. We basically came right up to that exact high, and again, you have to figure that the market's being held in check. The market has tried to break down. I mean, there's been countless days where we've broken down. Take a look at what happened here if I zoom in a little bit and then just go back a few days so we can really see and focus on it. I mean, take a look. Here's the day of the Fed, and the market reversed. The next day, we sold off and went sideways into the end of the day. The next day is when we had that massive gap down, and then a reversal. Here it is. Gap down on Thursday. The market reverses, and then late day, again, selling comes in on heavy volume. But the next day on Friday, the market just shrugged it off as the dollar, and remember this, folks, on Friday, the dollar, and let me just go back to that day right here. Here's Friday. Here's the reversal on Thursday. Last Thursday, here's Friday. The dollar gets crushed again. Notice that theme. The dollar gets crushed. It works in a saviors type mentality of saving the markets. So up goes the market here as the dollar gets crushed and then goes sideways. And again, the sideways move tells you something as well. It tells you just as much as the upward move, because when a market just goes sideways and is held in place, you have to assume. Now, yesterday, again, the market kind of tried to hit through this level. It was held sideways, and then all of a sudden, late day selling again came in. Not much, but a little bit to dump the markets back to the lows. Today, you got the panic sell, and out of the blue, the dollar gets crushed again. The S&P 500, NASDAQ, 100 stocks get bought up. The key players, Exxon, Chevron, Apple, comes off the lows, and all of these stocks prop the market back up, basically just holding a slight positive bias today. SPY is up 26 cents. All right, and again, really amazing. You can see the volume decline, the float coming in, and again, especially right here off of the massive decline. Look at the size of that volume on the sell side in the SPY or in the markets. Now, take a look at Apple today. Apple got crushed early on. All right, and again, look at this drop. Sells off a little bit into the close. Today, it drops from a high of $291.77 to $275, folks. Basically, $16 drop here or so, even a little more than $16 in the first 10 minutes of trading, and then bounces all the way back. What ended up happening here is there were rumors out that the COO of Apple was going to leave for Hewlett-Packard, and the stock just tumbled here. Again, do I think a lot of institutions were ready to dump as well? Yeah, I think that happened as well. Huge bounce off the lows, and then the stock started to get bought up, and we know the history here. Apple's still trading slightly lower, but it's in check now, not in a free fall. Other stocks that need to be watched as well, Amazon. Amazon looked at the dump early on when the market was selling, and then miraculously it comes back and is hovering around the flat line as well now. Key stocks as well, I showed you ExxonMobil. Exxon's getting a little bit of a sell here coming in, and I'd love to see late day selling in this market, and that is something that we have noticed as well of late. You have seen the institutions come out of the woodwork and sell late in the day, but again, it all seems like even if that happens, the next day the Fed comes in and does this kind of buying opportunity or crushes the dollar to lift the markets back up. So again, we'll watch into the end of the day here as we approach 2:30 p.m. Eastern Time to see exactly where this market goes. A little bit of selling come in, but the market, again, still positive. Take a look at Chevron. Chevron CVX getting a little bit of a fall, but you can see that's a massive move up on that stock, and that's a key component of the Dow, just like Exxon is as well, keeping this market on the slight positive side. Alrighty, folks, I will talk to you guys all tomorrow. Come join the Research Center at inthemoneystocks.com. Come join the chat room. Live analysis all afternoon. I'll be on the chat room live this afternoon, giving everyone play-by-play and swing trade calls and intraday trading calls as well. Take care, folks.